It's 9:36 right now, and the White House is considering major changes to how Americans buy homes, including the possibility of 50-year mortgages.
What does it mean for the housing market? Well, joining us now to break it all down is NerdWallet's lending expert, Kate Wood. Kate, good morning to you.
Good morning.
Okay, so what exactly is the administration proposing with these 50-year mortgages?
We don't know too much right now because we're really going off two social media posts. The one detail we do know is that the director of the Federal Housing Finance Agency characterized the 50-year mortgage as a tool to help with affordability.
Yeah, so we know a longer mortgage term would obviously mean lower monthly payments. That is helpful for home buyers struggling with today's prices, but there's a trade-off, isn't there?
There is a trade-off because the longer that you're paying the mortgage for, the more interest that you're going to pay on the money that you borrowed. So even though you might have a little more in your pocket each month, you're going to be paying more for the total loan overall. Additionally, longer mortgage terms come with higher interest rates. That's because lenders consider them riskier. They're putting their money out there, letting you borrow for longer. So you're going to be looking at a higher interest rate and paying it for a longer period of time.
You know, that was something we needed to point out. Critics are pointing out that, of course, borrowers are going to be paying interest for 20 extra years compared to a traditional 30-year mortgage. I mean, that's going to end up costing your homeowners more in the long run. It's also going to take you longer to build equity.
Yes. A NerdWallet ran the numbers on what it would cost to borrow $400,000 at today's 30-year rate with a 30-year loan versus a 50-year. Even using that 30-year rate for both, with a 50-year mortgage, you're saving less than $300 per month. The total cost is going to be over $1.3 million to borrow $400,000. That's over $500,000 more overall than if you were using the 30-year.
Wow, that is crazy.
And most of that's interest.
Yeah, because people will look at it.
A lot is interest.
Yeah, I mean, people will look at it initially if they're not like really focusing and say, "Oh yeah, well it's cheaper for me on a monthly basis." But wow, that is quite a difference. But what kinds of buyers though? First-time homeowners, younger families, retirees, who would stand to benefit the most with these changes?
So the folks who would probably be the most interested in this type of loan would be people whose focus is simply getting their foot in the door. They just want to become a homeowner. And that little bit of added monthly affordability is going to be a difference maker for them. That said, they probably wouldn't want to plan to stick with this mortgage long term. You'd be looking to sell or refinance. It's not the loan that you'd want to keep for your forever home.
What about the folks that need to be more cautious about this?
Folks who need to be more cautious about this would be those who are planning for the long term, looking at how much the loan is going to cost you over time. Also, if you're in an area where home prices are dropping, you'd want to really look out because as you mentioned earlier, you're building equity much more slowly with these longer term loans. If you have less equity in the home, you could end up owing more than the home is worth.
Wow.
Yeah.
That's
all right.
crazy.
So, I mean, if this were to move forward, what should potential home buyers be thinking about before even signing on to a 50-year commitment?
You're always going to want to look at all of your options. There are different mortgage terms now. The 30-year is overwhelmingly the most popular, but you're always going to want to weigh the pros and cons. Additionally, you're going to want to shop different mortgage lenders. Even though you're bringing the same financial characteristics to each lender, lenders are going to have different appetites for risk. They might view you a different way. And so not everybody is going to offer you the same interest rate. That interest building up over time is a really important thing to track, regardless of how long your mortgage lasts.
All right. Well, Kate, really important information to know. Thanks for laying it all out for us this morning. We appreciate it.